Good afternoon, everyone. Bonjour, Annie. My name is Kimberly Wahama Deshane, and I'm the Operations and Events Manager at Northern Ontario Angels. And today I'll be your moderator. Northern Ontario Angels is one of the top angel organizations in North America. We've been instrumental in closing 433 deals to date since our inception, totaling more than $643 million. We are governed by a regional board of directors and have an executive director and myself along for staff. We have 8 part-time consultants who are on the ground working with entrepreneurs to prepare them to become investment ready. They also sign up new investors across the region and around the world to help entrepreneurs build their business and provide jobs and economic development across Northern Ontario. Just a few Zoom items before we get started. Would ask that you please mute your audio and video channel. If you have questions, we will take them at the end of the presentation. You can put them in chat or at video at the end. We will be recording this event for future marketing and information purposes. Welcome everyone to a virtual event today co-hosted by Northern Ontario Angels and BDO Canada LLP. Preparing your company to grow. While we are co-hosting virtually from across Northern Ontario, we would like to acknowledge that we are in the Robinson-Huron and Robinson-Superior treaties and acknowledge all the traditional lands on which all of you in attendance gather today. I would like to now introduce our 3 speakers. Blair Smith, Officing Manager Partner, Northern Ontario from Thunder Bay. Nathan Dool, Treasurer of Northern Ontario Angels, Audit and Accounting Partner, Sault Ste. Marie. And Kris Zanatta, Tax Senior Manager, also from Sault Ste. Marie. Please welcome Blair, Nathan, and Kris.
Okay, thank you very much, Kim, and good afternoon, everybody. Appreciate everybody taking some time. I'm sure everybody's quite accustomed to the Zoom calls and so on. So appreciate the opportunity today from Northern Ontario Angels, and essentially we're going to walk through a bit of an outline of some thought leadership that the BDO put out as it ties into Small Business Week this year, and you know, if you want more information, there are certainly papers and so on that go with it on our BDO website. But with me today is, as Kim mentioned, so Nathan Dool and Kris Zanatta out of our Sault Ste. Marie office, and as Northern Ontario as an office, just to give everybody some idea. So essentially, we cover Sudbury to Kenora. So pretty much most of the same areas as Northern Ontario Angels, and obviously this is an organization that we're thrilled to be one of the sponsors of, and all the great work that is being done. So today we're going to focus on 3 main areas, just in terms of what we're seeing and hearing in the marketplace as businesses start to come out of COVID, and as the world continues to evolve. Sorry. So the 3 main topics today. One, we're going to talk about improving profitability. Obviously, everybody's always interested in making their business stronger. Preparing for the future. Nathan's going to cover that off in terms of just some things to think about, some of the challenges, some of the what we're finding in the marketplace that might be of help for you. And then Kris will finish us off just in terms of tax considerations, because at the end of the day, that's what a lot of businesses come to accounting firms. How can I save tax, or am I doing it right, and so on. So Kris will walk us through some of that. And then, as Kim mentioned, at the end, we'll certainly answer any questions, and we'll have some contact information at the end. If people are more comfortable, you can reach out to us afterwards, and we're more than happy to take some time and answer any questions. So the first area, just in terms of improving profitability. So probably four main things that we would focus on in this area. One, your business concept, your business plan. What should you be thinking about that way? And then the other areas will kind of flow out of that. Um, so, in terms of your business plan, this is one of those things, people often are asked to do it when they are starting or considering starting a business. And, obviously very, very helpful in terms of organizing yourself and bringing some structure and some focus to things. But one of the things that people tend not to do, and it's usually because we're busy, we're into the business, we're doing all sorts of things, is to continuously look at refining that plan. And obviously over the last 18 months or so, the world has changed fairly significantly from what it was before. And one of the things that when we're talking to clients that we're trying to emphasize for people, particularly when they're still relatively new in business, is making sure that they are going and reconsidering, do they need to change anything? And, it's not about rewriting the plan or anything like that, though some people do find that useful, but it's really about making sure that it's still relevant and has your business moving in the right direction. So, when we're talking with clients, knowing the plan intimately, like really understanding, uh, because when you're talking to whether it's potential financiers, um, whether it's your banks, your accountants, your customers, the people who know their business intimately, obviously, that passion comes through, and that's very key. But also more importantly, if somebody asks you a question about your business, the answer is right there. You don't have to stop and think about it. A lot of that is pretty ingrained. Most people who start a business are quite passionate about it, but there do tend to be areas of the business that they don't necessarily love or are as involved in. So making sure that you've done that. And this whole, particularly when you're trying to raise financing, whether it's with your bank or whether you're going to NOA or some other form of financing, making sure that passion and that detailed knowledge can come through in your discussions and in your presentations. So just considering refining that plan, making sure it's still current and pointing you in the direction that you want to go. In terms of the profitability side of things, it's in some ways it is fairly basic in terms of, we can increase our revenues or cut our costs, trying to find new markets or expanding our own percentage of coverage in the market that we're doing, are common things. Certainly one of the things, given inflationary pressures and so on these days, we're definitely seeing customers, increasing their prices and their how they're charging and so on. So, make sure that you're thinking about that. Sometimes we find our clients get very nervous about increasing prices, and that is always hard. I mean, we go through the same thing with our own business. When you're increasing prices, that can be difficult, but also understanding and appreciating that you're going to be paying more for your inputs and so on, and you're going to need to pass that along, because if you don't, eventually you just won't be making any money. I think as an accountant, one of the things that we maybe historically have focused more on, and it's because accountants tend to focus on numbers and so on, but cutting expenses, while that is certainly I would say a short-term fix on the profitability side, um, you know I would encourage people not to just focus on cutting expenses. The reality, as time goes on, businesses have to grow, and while you can cut expenses in the short term, you know, hardly ever seen a business that grows and continues for a long time just by cutting expenses. That's not necessarily a great strategy to improve your profitability in the long term. So, understanding how we can expand our market and our customers is really where I would suggest the focus should be. And then this whole understanding where your market is going. Again, I'll be happy when we stop talking about post-COVID and pre-COVID and all the rest of it, and we just talk about the world. But undoubtedly, it has changed significantly in terms of how people do business. The Zoom calls being one example, but online sales, online consulting, the fact that the world has become a much smaller place in some ways, in that there's so much work being done virtually now that, where once upon a time, maybe you had to be in Sault Ste. Marie to do the work. We're seeing more and more where businesses are coming in from outside of the locale to do the work. And that's both an opportunity and a threat. And you need to think about that in terms of your own business and what that's going to mean moving forward. I would encourage people, these things are often seen as threats, and you do have to protect yourself, but not everything is a threat. You'll do much better over the long run if you focus on the opportunities that these things can generate and bring forward for your business. So, those are three of the big things that in our in BDO's research and in building out the small business week. Those were some things that were highlighted by clients and non-clients as they gathered up information. So those are things from a regular ongoing business perspective. I think what I'll do now is I'll turn it over to Nathan, and he's going to talk about how do you prepare your business for the future.
Great. Thank you very much, Blair. Appreciate all that. And when Blair initially asked me to get involved in this presentation, I thought, wow, he's going to get me to talk about accounting. And then I saw the topics, and I said, well, that's much more interesting than accounting. So I was actually very happy to be involved today in this presentation, because I can talk about things that aren't necessarily accounting. So I'm going to go through a few items that really looks at the future of a business, because where Blair is more looking at the initial startup of the business, but I want to look at long term and the success in the long run. So one area that I want to touch on is improving your sales. So obviously a sale is what makes a business. You can't have a business without revenue. And there's all sorts of different sort of startups with a business. Some businesses, it takes years before a revenue is actually generated. I have clients in the technology and in medical research. They can take years to actually generate a sale. But really, it's the sales themselves that make a business and will determine your long-term success. So when we're talking about sales, expanding your business, so when you're looking at the actual business itself, it's looking at what capacity that you have, whether it be expanding with the people you have, whether it's expanding with facilities. All those things go into the actual growth of your business, and those things come with a certain amount of pain, and we'll talk about business financing in a bit. But all those things are necessary, and right now, when we're talking about expansion, and this really leads into our next topics, it's really there's really struggles with talent, with supply chain, but I'll touch on that in a minute. So when we're looking at improving your sales, one area is like the product and service offering. Many times people start a business with just one product or service, and that's their main focus. But when we look at a business being successful, often in order to continue to grow, there needs to be a reach out, a greater assortment of services and products. And I always go back to Jeff Bezos. He started Amazon, and he started it out of his garage, and what he sold was books. And I just looked today. I was like, oh, how many products does Amazon sell now? And I think they're up to 12 million different items. So like, he didn't stop at books. Like, he kept going, and it's the largest company in the world as a result. So we always have to look at what you're offering, and trying to continuously either improve what you have or increase the amount that you sell. So one of the other areas is prices. So many time we have businesses, they start out and they want to get those initial customers. So their focus initially is, maybe I'm going to price at a lower market amount. And, basically over time, the idea is as you grow, you're going to be able to charge more. So I'm not going to get into the prices right now with COVID, because everything is changing very quickly, but it's just a strategy to look at. But eventually you do need revenues that allow you to not only cover your costs, but also be profitable. So we go to the next slide there. So attracting and retaining talent. So this, anybody who's involved in recruitment right now or trying to find additional employees, this is a bit of a nightmare. It's very challenging. It's not, I don't think, what anybody expected with COVID. But the fact of the matter is, if you're trying to find people, it's very difficult. And when you look at trying to find people, it's not even as much about compensation anymore. You talk to people on why they change, and many times they're changing where they're working because they want things like flexibility, or they want to do more work that they believe has that matters to others, that helps others. And it makes it very difficult. You talk about the United States right now, they have 10.4 million job openings, and they have 7.4 million unemployed people. And it's obviously a major issue. It's a major issue, and it's not an issue that's going to be easily dealt with. I'm trying to hire people in accounting, and I used to get 10 applications. I get 5 now. And I asked one of my students here, and they said, well, it's not really that people aren't interested, there just aren't people in the classes like they used to be. Where there used to be 20, there's 10 now. So when you look at people, best thing you could do now is not as much recruitment as retention. Do everything you can to retain the employees you have, because it's going to be very difficult to attract people in the future. And it's not just compensation. It's things like flexibility. It's things about the perks. It's making a workplace where people want to be. So if we could just touch on financing next, Blair. So 2 ways to raise capital. So when we look at raising capital, and this is important in any startup, you're looking at equity and debt. So, equity is basically your investment in the shares of a business. And usually the way that most people finance their business is through debt. So we have traditional banks, which I would say are quite averse to startups. They have special programs, but again, can be a bit of a challenge in the commercial banks. In other areas, BDC and other government supported lending. I mean, they're probably more willing to take risks with the initial startups and an angel organization. So many times, Northern Ontario Angels, a lot of times what we do is the actual lending of money. It's not necessarily that every investor we have is looking for equity ownership. Many are looking to simply lend and receive an amount of interest. So, the debt challenge is real with any new business, and especially in those first years where there may not be a lot of revenues or the costs may be quite significant. There's a lot of challenges, and debt can be crushing. Most businesses within the first 5 years, that's really the critical stage in determining your success. So, but debt can be quite crushing. Private lenders, again, typically if you're getting somebody to lend money, especially in a startup, it's going to be more expensive. I mean, it's just a reality that somebody's willing to lend money and there's more risk to that lending. There has to be more of a reward for them. So one thing to really consider, and this is a major item, is in the long term, is interest rates. If anybody keeps an eye on inflation these days, right now we have a 4.7% inflation rate. And typically when people lend money, they lend money with the anticipation that they're going to get a return. So if they're lending money at 3% and interest rate is the inflation rate's at 5%, they're not actually getting ahead. So, if we don't get the inflation rate under control soon, which many people say that we won't before the end of 2022, there's certainly a good chance that interest rates will begin to rise. Equity financing. So NOA, many of our angel investors, they do get involved in early startups with actual equity investments. And great thing about equity is that there's no intention or no expectation for immediate payback. The equity investors are in to the business for the long term and expecting long-term growth. So one thing I will say is a good relationship with your bank and your advisors, including your lawyer, accountant. I mean, it's critical. Kris and I help many businesses in the startup phase, and they rely a lot of us on us for a lot of questions and assistance in getting started. And the bank you're with is going to be critical with helping you in the future. So covenants, requirements, that's a big thing with having external debt, is many times covenants are put on to that debt with the expectation that you meet those covenants or you'll be in default. So one thing I looked at today is, Facebook is probably one of the most successful companies in the world. And I wondered about the initial equity investors, the original angel investors. And the original angel investor in Facebook was actually Peter Thiel. And he invested $500,000 in Facebook for 10% of the company. 10% of that company now is worth $100 billion. He unfortunately sold at $1 billion. So, I mean, that was his decision, but it can really tell you, people are taking risks with their investing. So long-term, it's certainly, they're looking for that long-term gain, but not everybody's going to be Facebook. We'll touch on supply chain if this. So COVID has caused many nightmares with supply chain. So probably if anybody's had the misfortune of trying to purchase a vehicle since COVID started. I bought one in July. I went to the lot and they said, well, Nathan, here's the truck. And they had one vehicle in stock. And I remember when the last time I purchased a vehicle, there was probably 25, 30 vehicles. And I asked him, I was like, well, where's all the trucks? And he's like, well, they're sitting in Mexico right now, about 50,000 of them, waiting for a chip. And he said, I don't know when these chips are going to arrive. And that right there is a supply chain issue, that they couldn't get the last part, and these trucks are waiting for this one part to complete. And they can't sell these trucks until that's done. So it's obviously a challenge. That's just one challenge. These challenges are everywhere. I talk to clients all the time about people building new buildings. They say, well, I can't finish the building because I'm waiting on this part and it's not ready till March. And it's a huge challenge. You know, if you've been following the United States, they've been doing, infrastructure funding, and Joe Biden's been everywhere. And the problem with this, it's all great, but a lot of these problems will take years to fix. So, you know, whenever you're dealing with your business, you have to think, can I actually get the materials I need to do what I need to make my business successful? And you have to plan accordingly, because really, the supply chain issues are not dealt with easily, and they all tie into the issues with talent. That that a lot of the places creating the supplies, they need people as well, and they can't find them right now. So it's a very challenging area. So if we go to fraud, cybersecurity, Blair. So this is an area that's really scary. You know, whenever we're talking about a business, there's infrastructure that needs to be done, and IT infrastructure, and the biggest threat to businesses right now is, and we've seen it in some of our clients, is people get taken ransom, their information, their servers, and many times if they don't pay the ransom, they don't get their information back. And there's actually a full suite now of insurance options, because companies are taking out insurance in the possibility that they may be held ransom or defrauded in some other way. In the wide world of the cyber world. So when we talk about, there's obviously other frauds that occur, internal frauds and whatnot, but the data frauds are probably the most significant frauds that people are facing in our society. And I would say, if you do have a IT infrastructure, make sure that you have all the firewalls, that you have really good support from an IT provider, and that you have proper insurance in place, because those are all going to be critical to allow you to have a successful business. Because when you're a startup, you don't need something like this to happen, because your startup could end pretty quickly if you face one of these issues. So I'm going to pass it on to my good buddy, Kris Zanatta, and he's going to talk about the tax side.
Thanks, Nathan. So just a little bit of background on myself. I've been with BDO for about 11 years and focusing on the tax side of things for approximately 8. When Blair asked me to come on the call and talk, I knew it was going to be about taxes and not accounting or business growth and development. But I truly do like what I do, and I help businesses each day planning around their compliance requirements with their taxes and planning to minimize taxes. So I was happy to jump on the call. So for early on businesses, some of the topics I'm talking about are some of the most common things that are kind of asked or brought before myself, and usually with Nathan as well. Nathan and I work quite closely together with the Sioux and surrounding clients. So we can move on to the next slide, Blair. So typically when I sit down with with a new client or an existing client that is looking into a new venture, typically one of the first things they're coming to me saying they want to do is incorporate their business. And a lot of times people are coming to me and saying, well, let's get a corporation set up before they even start their business. And sometimes it's warranted, sometimes it's not. There's different reasons that an individual would want to operate from a corporation, right? One major advantage that's not outlined on the slide is the liability protection that a corporation would provide its owner, right? So the assets of an individual that owns a corporation are protected as they're outside of the corporation, right? And if anything was to happen within that company that's incorporated, the potential liability is only to those assets, right? So there's legal reasons to incorporate, right? So that's always something that should be considered. But as I'm speaking to tax, like we could talk about the potential tax advantages of a corporation, right? So a corporation for an individual from a tax side is largely beneficial when the company is generating more profits than that shareholder, that owner manager requires to live, to fund or finance their lifestyle, right? When the corporation is earning more and that money can be retained in the corporation, essentially that individual that manages and operates that business, owns that business, can benefit from a tax deferral. So in Ontario, a corporation, if it qualifies as a Canadian controlled private corporation, can benefit from the small business deduction on active business income, and that small business deduction is a lower tax rate on the first $500,000 worth of net earnings, and that $500,000 is taxed at 12.5%, right? So just looking at numbers, and we love our numbers as accountants. Say a corporation is making $100,000, it's going to pay 12.5, and it's going to be left with 87,500. Whereas if an individual earns that 100,000 as a proprietor, and assuming that individual is at the high rate, they're going to pay 53% in Ontario. That's the highest marginal tax rate in Ontario, right? So they're going to be left with 47. Right. So like when we're looking at the difference in potential, like the deferral power on that $100,000, essentially you can defer almost $46,000 or $40,000 worth of earnings, which is a significant deferral for just retaining that money in the company. And a lot of times with startups in businesses early on, a lot of that earnings is going to be used to reinvest in the business. So earning income as a proprietor, you have no choice but to pay tax on all of your net earnings in the year, right? Whereas a corporation, you benefit from a lower rate. And if that money is going to be used to help grow the business and that money is going to be retained in that corporation, you can truly benefit from the tax deferral. A lot of individuals think that a corporation helps save taxes. That's not necessarily the case. The truth in it is that a corporation can help you defer taxes, right? So the plan would be, well, you let these assets grow inside of a corporation, and then you can pull them out personally when they're needed at a later point in time, and hopefully you can benefit from lower rates that way, right? So the biggest advantage of a corporation from a tax perspective is that deferral. One thing that other individuals constantly ask is that, or mention, which is a little bit of a myth, is that they think the corporation can benefit from all these additional deductions if their business is run through a corporation. That also isn't necessarily the case. Like I said, that's a myth. Typically, the general rule when it comes to deductions from a business is within certain exceptions, is any any expense or expenditure that's incurred to earn income is going to be typically deducted from those revenue sources, right? There's exceptions, or there's rules with respect to certain expenses like meals and entertainment, where you're limited to deducting only 50% of the amount incurred. But whether you're a proprietor or you're operating through a corporation, the legislation into what you can deduct is the same in either scenario, right? So a corporation doesn't entitle you to additional deductions, right? Like I just want to reiterate, the tax deferral opportunity of a corporation is the biggest benefit, right? And there's no real magic number with respect to, well, this is the amount of money I have that I'm not spending personally. Doesn't make sense to incorporate. Everyone's situation is a little bit different, but the one thing to bear in mind is a corporation is a separate legal entity, and since it's a separate entity, it requires additional reporting to the government that proprietors don't really need to disclose. A corporation needs to disclose a statement of its assets and liabilities or a balance sheet to the government, so the government can track those assets separately from the owners, right? So as those assets are drawn, the government knows that, well, John Smith, owner of company ABC, should be paying personal tax on the draw of those assets, right? So the additional reporting requirements for a corporation does result in additional costs, right? And the one thing that we look at as advisors is, yeah, you can benefit from you can benefit from the tax deferral, but does it justify the costs that come around with reporting as a corporation? So on to the next slide. Other things to be aware of early on in your business venture is any sort of additional tax compliance requirements, right? And typically people know, and sometimes I'm surprised when early proprietors or young business owners come into my office and they make a bunch of money, and I tell them that they owe income taxes on that money. They get surprised, thinking that they didn't have to pay their fair share to the government. But in addition to your income tax liabilities, there are also other taxes that you should be aware of, and one of them is HST or GST, right? So typically a startup is exempt, or you're not required to charge HST because you meet the definition of a small supplier. And essentially a small supplier is any individual or any business whose worldwide sales is under $30,000 for the past 4 quarters. Okay, once you exceed that 30,000 mark in the past 4 quarters, and it's a rolling 4 quarters as well, you're no longer considered a small supplier, and you need to register and start charging HST or GST, depending on where you are physically located on your services. This is often something that gets overlooked and could be problematic for early businesses, as they don't know their compliance requirement here. And typically when it comes to GST, HST, pleading ignorance or just saying that you're not aware of the requirements, if the CRA was to come back and say that you should have registered, doesn't typically work. Like, they can go back and say, well, you hit the $30,000 mark at this date, and HST should have been charged on all your sales since this point, and essentially they can assess you HST on those sales. So it's just being aware of the $30,000 mark and knowing when you need to register immediately, so you can avoid that. The one thing with HST in the collecting of HST, is that any HST that's paid on your expenditures would offset the amount owing to the government based on what you collected, right? So you're allowed to claim a reduction in pay the net amount of HST to the Canada Revenue. Essentially, what the HST is intended to be an end consumer tax, right? So whoever the recipient of the final product or service is the person that bears the tax, right? And as a business, you're essentially either facilitating the production or the manufacturing of that good, or you're providing the service to the end consumer. So you're kind of a middleman for the government in the collecting of this tax. When you originally register for HST, you can choose how often you want to file the returns based on your total estimated annual sales. And typically you can choose monthly, quarterly, or annually until your sales hit about $1.5 million. And then once you hit that amount, you have to register monthly. So the main thing is just being aware of the small supplier threshold and staying on top of that so you can register timely and just be aware of your compliance requirements. Next slide. So for early businesses and any business really, it's not just startups or proprietors or corporations. One thing that we should look at, and this is kind of in line with what Nathan was saying with planning and growing your business, is available government incentives. And given the COVID pandemic that we've experienced, there's been a lot of new government incentives or programs that have been introduced. Some of them have come and went, and some of them are still in place. But it's just being aware of what's out there to take advantage to help grow your business. Right, like one thing that we've helped a fair bit of our clients with is the wage subsidies that were introduced at the start of the pandemic and have been pretty much going on until actually last month was the last COVID period claim, right? So a lot of these incentives have helped our clients continue to operate through these tough times, and a lot of them have helped our clients to succeed in these tough times, right? And without our roles as advisors, a lot of our clients may not have been able to take advantage of some of these programs. And I was looking at the wage program, the CEWS program that was introduced by the government, and nearly $100 billion in CEWS claims have been paid out by the federal government to assist with wage with payroll since the start of the pandemic. And that CEWS program ended last month, late October, and then they introduced the Canada Recovery and Hiring Program, which is intended to kind of fill the role of the CEWS. And in addition to the CEWS, there was also the rent subsidy program, the Canada Emergency Rent Subsidy, and the government paid out nearly $8 billion in the rent subsidy program since the introduction of that program as well. So there's a lot of money that was paid out for pandemic help. But in addition to pandemic help, there's also programs that were in place beforehand that are still in place now. In Northern Ontario, we have the NOHFC department that helps with support grants and early business grants to get businesses up and on their feet and get them rolling. And there's the Ontario Trillium program that has a number of grants as well, right? So regardless of where you are in your business, if you're looking at potentially hiring additional individuals, or you're looking at acquiring major capital assets, there's potential programs that you could take advantage of to assist with that. But in addition to just traditional grants and applications, there's also tax programs like the Scientific Research and Experimental Development Program that entitles you to tax credits where you can potentially recover a portion of the amounts expended. There's a lot of different programs, and it's just dealing with business advisors or accountants to help you know what programs are out there to take advantage of is something that every business owner should look into. So, and then the next slide. So with respect to a corporation or a proprietor, and one question we get from a lot of our corporate clients is how do they go about and compensate themselves? With the main thing as a proprietor, you don't really have the flexibility in choosing how you compensate yourself. Like I said before, you're going to be taxed on the net business earnings regardless of what you take or what you reinvest in the business. As a corporation, you benefit from that tax deferral, but at the same time, you're going to need to pull money from that corporation to live, right? So as a business owner, you can kind of you have a little bit of flexibility in choosing how you want to compensate yourself. You can either pay yourself, put yourself on payroll and pay yourself a salary or an hourly wage if you seem fit, or you can pay yourself dividends, which you declare quarterly, monthly, annually, depending on what you seem fit as well. At the end of the day, which one is better than the other? It's kind of a business by business, person by person thing to look at to see what's better suited. There are advantages and disadvantages of each. One of the biggest advantages of a dividend is really you just take the money as you seem fit. You don't need to worry about payroll deductions and making remittances to the Canada Revenue. If you need $5,000 from your business, you take your $5,000, and then at the end of the year, you could see all the money that was drawn and declare a dividend to bring it all into your personal income. Whereas if you take a $5,000 payroll check, well, on that $5,000 payroll check, there's going to be CPP that needs to be withheld and remitted to the government, right? And the CPP maximums, they keep getting higher and higher. And like with respect to the CPP, you got to contribute into the program, and the business or the corporation would have to match that contribution into the program. And as the owner manager of that corporation, you're essentially paying it twice, right? It's all cash that would otherwise either be retained in the business. So looking at the CPP maximums for 2021, it was about $3,200. And you cap out the CPP contribution once you hit about $61,000 worth of earnings. So if you're going to draw a salary of about $65,000 from your corporation, in addition to that $65,000, you're going to have a payroll costs of about $6,200 between yourself and the corporation, which is just cash flow that could otherwise be used in the business, right? So one advantage they do say to a salary is the fact that you contribute, you kind of create RSP deduction room, and whether we consider that as a benefit or not is like I'm a little bit indifferent in the sense that you'd be paying yourself money from a corporation where you can defer the tax to just take a deduction personally. Typically what I advise most of my clients is, well, just leave the money in the corporation to fully utilize that tax deferral that's available by earning that income in the corp. So that's one thing. The one thing I want to bear in mind with this salaries versus dividends, one thing I want to mention is with all these wage subsidy programs that have been happening, like a lot of our clients that were being paid on dividends may not have been able to take advantage of some of these programs, and there was rules in place for non-arm's length individuals that were on payroll, right? Like the government didn't want to introduce this wage program, and then they have John Smith, owner of ABC Company, all of a sudden is being paid a salary so he can get his 75% reimbursed by the feds, right? So the government's like, no, it's all based on how much you were paying yourself pre-pandemic to determine what you're entitled to for your subsidy, right? So if we were paying our clients by way of a dividend, unfortunately, they wouldn't have been able to benefit from that CEWS program, that emergency wage subsidy program. But like when we were planning around this for a lot of our clients, we weren't really planning for a global pandemic. So it kind of was something that was unforeseen, right? So like we can't always see into the future and see what's going to happen, but just looking purely at the the tax side of things, typically what we see a lot of our clients doing is paying themselves by way of a dividend, just because it's very, very easy, and you can avoid additional payroll costs by paying yourself by way of a dividend. So.
While the conservatives play silly partisan games,
Okay. Well, thank you very much, Kris and Nathan. That was great. Yeah, I think we'll kind of open it up to questions. I think the one thing for businesses to be really thinking about as you move forward, we have seen huge number of clients benefiting from these wage subsidies and other programs. Making sure that you're thinking about what does your business look like without those programs, because like honestly, we certainly have seen some businesses have been more profitable than ever with as a result of the wage subsidy type programs. And making sure that what it's going to look like when that stops, because certainly that will be imperative, because those programs are ending or have already ended. So think about that. Talk to your advisors, talk to your bank, your lawyer, your accountants. Make sure you understand what that means for you going forward. So we'll kind of stop there, and if there's any questions.
Any questions? Okay, seeing none. Thank you so much, Blair, Nathan, and Kris. I would now like to thank everyone for participating in our presentation today. I'd also like to thank our funding agencies, FedNor and NOHFC, and our partners, BDO, Bearskin and Par, Motion Arc Studios, N1 Solutions, Firedog Communications, and Squint. You can find us on social media and sign up for our quarterly e-newsletter at northernontarioangels.ca, and we welcome you to visit bdo.ca. Have a great afternoon. Stay safe, everyone. Thank you. Merci, miigwech.